Good morning, good afternoon, good evening. My name is Dipesh Patel, editor at Trade Finance Global. Welcome to FCI's 55th annual meeting in Marrakesh. Today, we're tackling the topic of receivables finance in Africa. So why is this topic so crucial? Well, receivables finance is not just a financial instrument, it's a lifeline for businesses, especially in the ever-evolving landscape of African trade. Africa has been a gateway for trade for centuries, yet the development of modern financial instruments like receivables finance has lagged. Today, we aim to explore why that is and what can be done to accelerate its growth. Institutions and development banks are really key players in this landscape. They serve as catalysts for innovation and regulatory frameworks, providing essential financial support mechanisms like guarantees and credit facilities. Their involvement not only legitimizes the practice of receivables finance, but also paves the way for sustainable trade ecosystems across Africa. But we need to dive deeper into what exactly these institutions are doing and what more they can do in the future. I am very happy to introduce our panelists, Mr. Ahmed Atut, Acting Director, Financial Sector Development at the African Development Bank Group, Mrs. Kanayo Awani, Executive Vice President at Afrexim Bank, Mr. Hani Salem Sombo, CEO of the International Islamic Trade Finance Corporation, or ITFC, and Mr. Peter Mulroy, Secretary General at FCI. Welcome to Trade Finance Talks from Marrakesh.
Thank you very much.
So, quick introductions. Can you give a brief description of who you are, where you're from, and what your organization does? Mr. Sombo, I'm going to ask if you can start.
Thank you very much. First of all, I would like to thank you all really for giving me this opportunity to participate in a very important event, and also participate in a very important to discuss a very important topic this today. And briefly, I'm been almost close to 40 years in development finance and in the IDB group, the Islamic Development Bank group. Went through a lot of really jobs during this period, leading positions, and now I am the Chief Executive Officer of ITFC, and also I am the acting Chief Executive Officer of the ICD, which is the Islamic Cooperations for the Private Sector Development.
Thank you very much, Mr. Sombo. Mrs. Awani, over to you.
My name is Kanayo Awani, Executive Vice President for Intra-African Trade Bank at African Export-Import Bank. African Export-Import Bank is a leading Pan-African development finance institution. We pride ourselves in being the trade finance bank for Africa. Not only that, we're also at the forefront of promoting and ensuring the successful implementation of the African Continental Free Trade Agreements. And that's why this subject is also important for us, not just in the context of trade finance, but also as we look to implementing successfully the AFCFTA. Thank you, and thank you for having us here.
Such a pleasure. Mr. Atut, over to you.
No, thank you, Dipesh, and thanks for giving us the opportunity to be here today. So, as you said, my name is Ahmed Atut, and I'm the Acting Director for the Financial Sector Development Department of the African Development Bank, and I have been in the banking sector in MENA region and Sub-Saharan Africa for the last 24 years. And for the African Development Bank, as the Africa's premier development finance institution, I will play a counter-cyclical role in supporting our regional member countries when time gets tough, and of course trade finance, similar to our partners in African Bank, and of course ISEC, when the global market conditions are getting different and challenging, we see trade finance as a room to support our regional member countries. So it's a pleasure again to be here today, and looking forward for that discussion. Thank you.
Thank you, Mr. Atut, and we'll be talking about the counter-cyclical nature of trade and receivables very shortly. Last but not least, Mr. Mulroy, over to you.
Thank you, Dipesh, and really thanks to your organization TFG for, let's say, hosting this this video, special video event in honor of the 55th FCI annual meeting in Marrakesh. Very excited to be here, and especially with this esteemed audience. Yes, first off, my name is Peter Mulroy, so I'm the Secretary General of FCI, and well, FCI, I think most of you know, is the global industry body, nonprofit association based here in the Netherlands, representing the interests of the invoice finance, factoring, receivables, and supply chain finance industry. I kind of use the term that FCI is in a way the voice of the invoice finance. So we look after all of the, let's say, important issues facing the industry in terms of legal, regulatory, in terms of development, what I call healthy development of the industry in general. So, and of course, this is a very special moment, this being the 55th anniversary of FCI, holding the special annual meeting in Africa, in Morocco. Morocco being the one of the gateways of trade in the world. So we couldn't be happier to be holding this. And again, thank you for your inspiration to hold this event today. Thank you.
Thank you very much. And Mr. Moro, Marrakesh, a gateway for trade, and as to say it in your own words, as the voice for invoice finance, how has receivables changed from those historic IOUs in Mesopotamian times to today? And am I right in saying a receivable is really still a receivable or an IOU?
Yes, it's a fascinating point, and I love the fact that you weave in this story of Marrakesh into this question, because, of course, you're right. I mean, the birthplace of let's say open account trade is in these clay tablets in the Mesopotamian period over 5,000 years ago, and it has evolved in how traders use these assets called invoices to get financing. And there's been many iterations and evolution of this concept called factoring over the years. But from those early days to what we call more industrial factoring, where you had these companies that were traders, basically buying product and then selling it, but also offering financing. And then back in the, I think, 1920s, the U.S. Supreme Court ruled in what was then a case called Del Credere factoring, which basically was the birthplace of what we call the modern era of factoring, which allowed for the kind of the severing of the kind of trading concept of factoring into a finance product, and also the permission of the assignment of receivables and the ability to do non-recourse financing. Today, I was just looking at the statistics. Over 70% of all factoring is done on a non-recourse basis. With the let's say the help and support of getting protection against debtor bankruptcy, debtor default, the ability to have off-balance sheet treatment for publicly traded companies, and also the Basel capital element of having reduced capital risk through the usage of as a bank, as a regulated bank. Using that to basically reduce the capital cost of their business. So factoring has really kind of morphed into so many things, and yeah, it's quite an exciting time. And of course, having Mr. Sumbal here from the Islamic Development Bank, the ITFC, the launch of the Islamic factoring just recently, and also other new evolutions like the receivables exchanges and things like that I'll talk about maybe later.
Thank you very much, Peter, and what a great introduction to set the scene. Ms. Zawani, Africa is historically and remains a gateway for trade and receivables. Some would say longer than from the West, but the development of receivables finance has somewhat lagged. Why do you think this is?
So thank you. Let me start by saying that there are a couple of factors, but also to set the stage by saying that Africa is diverse. I think one of the main things is the economic diversity of the continent. When you look at countries like Morocco, Peter rightly mentioned, Egypt, South Africa, they are well banked. They have a more robust receivable finance, financially robust financial services system, but also more robust trade finance instruments, including receivables finance, On the other hand, you have others that are less developed. And so when you put them, when you marry these two, you'll find that, of course, the more mature markets have more products to offer in receivables finance. The other issue that you might also consider is the informality of trade. There's a huge informal trade across Africa, and that does not make for capturing data and formal receivables. That's one. So if you put that in context, and that's one of the things we're trying to do. And of course, but then when I made my introduction, I forgot to mention also something very important is that at Afreximbank, we're leading a number of initiatives to promote factoring. I'm actually also the chairperson of the Africa chapter of FCI. Well, I'll talk a little bit about that in more detail. But if I step back, if I step into the also the regulatory and legal environment, even just the differences in regulations for, say, factoring, right? Some people will treat some banks will treat, or some countries will treat factoring differently. Some are regulated by central bank. Some want factoring to be offered by commercial banks, for instance, and others are more open to other finance house arrangements. The way stamp duties are treated in different countries in terms of purchase receivables and other collateral rights and contract enforcement of receivables across various countries are some of the challenges that we face, as a continent. And one of the things that we have done in Afreximbank is to lead, working with FCI, to lead the effort to promote an enabling regulatory and legal environment. In 2016, for instance, we launched a model law for factoring. And so far, it has been either been adopted or we have made input into domestic laws or countries that have domesticated the model law in about 7 to 8 countries, as it were. The other thing is access to finance as well. SMEs, as you know, will often rely on receivable financing, but cannot get it. Statistics will show that over 60% of SMEs on the continent that are going to banks for financing will be rejected. So in that context, it requires a bit more deliberate and intentional, efforts to say that financing is available, and it's not overly available, that is effective and as well as affordable. So one of the things we've done in Afreximbank also is to focus on structured trade finance, but as well as also create structures to enable us deal with factoring. We have a dedicated factoring strategy. If I may just focus on factoring because I spoke about SMEs, is that we have a dedicated strategy to promote factoring in Africa and to finance it. So what then has happened is I think within the time period when we have focused on factoring, we have probably disbursed about close to $40 million in the last couple of years, or euros. We have also introduced a reverse factoring supply chain platform that we are piloting with a bank in Nigeria. Again, these are ways that we're trying to see how we can promote factoring on the financing on the continent. But like I said, it's a big issue. There's a huge receivable finance gap. I think in Africa is about $330 billion per annum, and no one bank can deal with it. There's also the lack of awareness and skills. The reason sometimes that the SMEs are rejected is because there's always there is a lack of awareness and lack of skills of receivable financing in the marketplace. Some of the things that we've done working with FCI is also to promote awareness, to promote capacity building. I think between 2021 and 2023, we have probably done about 10 seminars and webinars. Even in the wake of COVID, as there were no travels, we were still hosting seminars to ensure that we drive the message home, we drive the education home. And even more recently, we started focusing on emerging factors and capacity building using, Mr. Tut would like to know, African Development Bank, we got a FAPA grant to support capacity building among factoring businesses on the continent. And we did one in Dakar last year, and very recently in July, we did one in Abuja in Nigeria, again, to promote factoring. I'll leave it there, but these are some of the things that I think lack of awareness and skills is very important. Lack of financing as well, or lack of access to financing. The economic factors I mentioned, the diversity and contrast of the African continent, as well as legal and regulatory environments.
Thank you very much, Ms. Zawani. And I think you've clearly given an overview of some of the challenges, but also opportunities. Now, Mr. Sombo, with the theme of this conference as back to business, back to basics, how do you see the evolution of receivables finance in light of past events and challenges?
Thank you very much for this question. I think, I would go to this question after I really explain how really important is trade finance in the development, world, the development arena. I think the, IDB group has really, believed late 70s, that trade finance is the engine of growth, actually. And that's why, the first trade finance operations were in the late 70s. And with the increased, actually, role of trade becoming an engine of growth over the years, after all, we felt that there should be a devoted, really, institution like ITFC to be focused not only on trade finance, but also on developing trade in member countries. As said by dear Kanai, that many countries, they have different really level of readiness to deal with trade, and in all aspects, in terms of capacity, in terms of really regulations, and so on. So we felt that ITFC should really focus more on this global concept of really trade development by providing trade finance, where we have now succeeded to reach more than $75 billion since 2008, when ITFC was established. And also we have been really working on the other side, on the trade development aspect, by introducing a lot of really trade, I would say, flagship programs. And definitely the Africa Exim Bank is one of the really strategic partners with us in many of these flagship programs. We have, for example, believed always that building bridges between continents, especially the Arabs and the African, looking back into the history of trade, we felt that this kind of flagship programs can really introduce a lot of diverse products and solutions for really to enhance intra OIC trade, for example, and also across borders trade, to the African continent, for example. This Arab-Africa Trade Bridge program is one of those really successful programs, and as I said, we are focusing on finding solutions. Every time we present a flagship program, we aim at really finding solutions for ensuring that trade flows, and ensuring also the access to financing. We introduced the SME development program, where exactly when we felt that many of the SMEs do not really meet the requirements of financial institutions, by bringing their capacity, by making them really prepare bankable projects, and so on. So every stage, ITFC is really, introducing a lot. Now, recently, we are having a very important, trade program for the Central Asia, countries, and so on. So going back to the theme, I think, in a very turbulent, economic environment, over the past years, we have started to really look into how to be an innovative institution, where, for example, over the past year, the receivables finance industry really also faced so many challenges, as said rightly, including the financial crisis and the global pandemic, recently. And now we are also facing the geopolitical issues that in Europe. So the financial crisis always highlighted these vulnerabilities in the system itself, and of course leading to what we call a need for a regulatory enhancement that will support actually the member countries during these crises. Also, we have felt that navigating the pandemic, or the crisis impact on the system is very important. I'll give you an example. When you look at the corona, pandemic, where we had a dual impact on the receivable finance. On one hand, you have the disruption actually to the international trade supply chains, which led, of course, to a delayed in the default receivables and payments and so on. We felt that we have to focus on that. On the other hand, also, we wanted to support governments during really this very difficult time. And I think we have introduced many programs during the COVID-19 program, and it was implemented smoothly. And a lot of support was given to member countries in terms of the different phases of the pandemic. During the pressing needs in the beginning, where countries needed medications, needed actually medical supplies and so on. And then after that, helped member countries to recover from such pandemic. Also during that time, I think back to business, we have felt there is a sectorial shift actually. The crisis actually triggered many sectorial changes within the receivable finance industry, where strategic sectors like energy, pharmaceutical and food securities and others, all of these actually were the priorities were also different. But however, we felt that we need to really go and provide solutions to very important sectors like the health sectors, which was actually not a priority for ITFC at that time. But again, we provided solutions for that. We felt that innovation, and we really supporting member countries to be resilient for such crisis, because coronavirus is not going to be the end of the viruses that the world is going to face. So we have had a lot of work really to enhance this part with member countries, and we focused a lot on that. Multilateral support, for example, played also a very important role in sustaining actually the receivable finance sectors. So all of this actually, including trade facilitations programs that we brought back, are actually helping really member countries through multilateral development banks and other strategic partners to support Africa. I think I just want to maybe later on focus on how Africa is really important for us, and how we are also playing really a very important role later on. I'll stop here. Thank you.
Thank you very much, Mr. Sombol. And you wrote a great article on TFG around building bridges and the Arab African Trade Bridges program. And I think with bridges come framework, and building that legal framework is really important, which is what I wanted to touch on the next topic, really going into depth on the legal framework for receivables. So Mr. Mulroy, creating that framework for receivables finance is one of the more critical steps needed to accelerate its use around the world, as you've been discussing. And you've got some very exciting news to announce around UNIDROIT, the model law for factoring. Can you talk us through this and why this is important?
Thank you, Deepesh. Yes, it is an exciting time. During the upcoming annual meeting in Marrakesh, we will be launching on that Monday, the 18th of September, 3 major initiatives. The first being the factoring model law by the UNIDROIT, the UN, and this is the first, let's say, launch of a kind of a global model law. The second is the launch of the IFC World Bank regulatory guide to support the development of regulations for central banks around the world. And the third is the FCI legal study. So we embarked on a legal study 3 years ago to look at all of the legal and regulatory frameworks in the 94 countries FCI has membership in today. And so we will be also launching this legal study during the annual meeting. So it's a kind of 3-pronged three pillars, basically. One is going to absolutely help the other as well. For the model law, for example, even if a country has particular elements in their contract law, their property law, elements relating to assignment, elements relating to the protection of third-party rights, debtor notification, whatever the issue is, the model law is an attempt to kind of, let's say, create one holistic law globally in every country. And this is what, ultimately, because in receivables finance and in receivables purchase programs, of course, you have to deal with every legal jurisdiction where the seller is located to basically perfect your purchase of that receivable under the laws of the jurisdiction of the seller. And so technically, in FCI, we have 94 countries, 94 different laws or the lack thereof. And so the idea of the FML is to basically bridge that gap and for countries, especially in emerging markets that don't have any law relating to factoring, they can introduce a law through this FML. And then, of course, the IFC provides that, let's say, entree to allow central banks to have a clear and precise roadmap as to what to implement relating to guidance and oversight of the factoring industry. And then lastly, of course, is the legal study. And the legal study then gives you what exists today from a regulatory and a legal perspective in each country. So that's why I say all three are complementary. And this is to me what's so exciting about this kind of special moment. Now, of course, as Kanayo rightfully stated, Africa already has their model law through the Afro-Exim Bank. And really, this was the first initiative by a development bank or intergovernment agency to create a model law at that level. And and truth be told, as she said, you can see the incredible positive impact it has had in the development of receivables finance in all these countries in sub-Saharan Africa where they had nothing before, and now they have a level playing field to be able to develop and do invoice finance. So yes, but this is just to take it to another level, really, this initiative. And, we couldn't be more excited about it. And having all these, the players there, the UN, the IFC World Bank, of course, the Afro-Exim Bank, the ITFC, Islamic Development Bank, and the African Development Bank, which, by the way, as Kanayo mentioned, supported an incredible project to develop the tools to help companies, to help financial institutions develop factoring in Africa. And it has had such a profound effect on Africa. And that's also going to be highlighted at the annual meeting. So there's a lot to celebrate, a lot to talk about. And I kind of view this annual meeting as really the start of a new era for the industry. And I couldn't be more excited about it. So thank you.
Thank you very much, Mr. Morrow. I guess, Mr. Zombo, can you explain the implications of the model law on factoring from a Sharia financing perspective, and perhaps taking a bit of a step back, how are receivables finance assets currently recognized under Islamic law?
First of all, as you know, the Sharia laws is a religious law that lays down the governing principles for the I would say the spiritual and the mental and physical behavior that must be followed. It actually, categorized to protect actually, all human, life and including, as I said, their families, their businesses. So the implication of this kind of a law is very, very important, and we recognize that the receivable finance assets are well recognized under the law. Why? Because I think the adoption of a model law for factoring also aligns very well actually with the Islamic Sharia, because it aims actually to establish a very clear rights and responsibilities of individuals, also while you're actually safeguarding the other parties' interests. The Islamic Sharia principles actually established as to regulate all of this, except for the aspects conflicting, of course, with the Sharia values, like the interest based on others. That's why when we cooperated actually with FCI and I felt that this was really a great thing we have done to come up with the Islamic factoring, laws and principles. I think that suits really our mandate, suits our really, I would say, complies very well with the Sharia, with the Islamic Sharia. And also on another side is the Islamic financial institutions also have shown the capacity to innovate within Sharia guidelines itself. So over the years, many things has developed, and of course, that's how the big groups like the Islamic Development Bank Group, including the three entities, ISIC, ICD, and ITFC, were able actually to innovate over the years and to produce new products that can really suit the needs of our member countries and suit especially the different sectors like the private sector. ITFC actually is a leader in Islamic financing, and we promote Islamic financing, and we try to always align also with the developments that is happening in the world. And also the Islamic financing, as I said, it really aligns with so many ethical, I would say, ethical financing that is well to all of you. I think as being a leader in the Islamic financing, we exemplifies also the development and introducing this kind of innovative solutions, which of course definitely served, as I said, my member countries all over. We have 57 member countries. When you look at ISIC, which is very well known entity to you, they have really developed a lot of their laws and regulations, which is based actually on Sharia principle, but also was very suitable for really for the global financing system. So ICD is the same. We have joint projects with ICDs mainly focused on big term finance projects like infrastructure projects, and also providing line of financing, providing equity financing. We cannot do this without really adapting and aligning our really laws with the other laws, as I said, without really impacting anything related to the values itself. So definitely we recognize well actually the receivable finance assets.
Thank you very much, Mr. Sombol. So just to summarize, we've set the scene. We've highlighted the capital relief and access to finance benefits of receivables finance and forfeiting. We've also set out and talked about the framework, the legal framework, the model law on factoring, and also started touching on some of the evolutions and innovations going on in this space. Let's talk more about the role of development banks in trade and receivables finance. And Mr. Atut, to your starting comments, we've had pandemics, wars, trade disputes, and frauds at colossal levels. Some have termed it a series of black swan events. Development banks are often mandated to really step in and power the engines of global trade when times get tough. Can you explain, perhaps from an AFDB perspective, the kinds of trade and receivables finance support mechanisms put in place to help guarantee and keep trade flows going during these uncertain times?
Thank you so much, Deepish, for that question. And it really goes to the core of our commitments. The bank's private sector development strategy, for instance, highlights this role in its vision of supporting private sector-led growth as a means of creating jobs and augmenting socioeconomic inclusion and building certain type of resilience and sustainability for our regional member country, which is really helping us to achieve the sustainable development goals and the Agenda 2063. So building resilience is therefore at the core of our work and means working with our clients, sovereign and non-sovereign, to help them in difficult times. So with respect to trade in particular, and as I said in my introduction, we see trade as essential to economic growth and building resilience. That is why we leverage to all our instruments and upstream and downstream capabilities to support the sector, as demonstrated by different type of operations that we have been doing, and I'll give you some examples. So at the policy and regional level, for instance, the bank continues to support the implementation of the African Continental Free Trade Area, the AFCFTA. And the one example is the last year, we approved through the African Development Funds a facility of or a support package of around $11 million to the AFCFTA to help enhance the effectiveness of its implementation. We believe at the African Development Bank that the successful implementation of the AFCFTA would help in the kinds of deep reforms necessary to enhance long-term growth in African countries. It also presents a major opportunity for African countries to build resilience as when implemented, it will really facilitate to cut the different type of red tapes, bureaucracy, custom procedures, and will simplify a lot of regulatory requirements, and will produce up to maybe 292 to 450 billion in potential income gains. You mentioned trade frauds, Deepesh, and I think the IMF estimates that 45 of our regional member countries, which are mainly African countries, over the last decade, lost between $40 to $93 billion to opacity, corruption, and criminal activity related to larger international trade transactions. For us, this is lost money, which should help plug the significant funding gaps on the continent. And the bank aims to embark on a program working with Global Finance Integrity to address this challenge in a 3-year program. Turning to our downstream work, the bank launched the Trade Finance Initiative in 2009, and then it was mainstreamed in a fully fledged trade finance program, which is currently in place since 2013. Since that date, which is 2013, we have approved around, or have seen around 73 projects across 326 financial institutions in 44 African countries, with approximately USD 8.7 billion in form of trade flows supported. But let's also be honest now that we, despite our efforts and the efforts of our development partners, there are still persistent trade financing gap of USD 80 billion, excluding the needs of the informal sector, identified in our latest trade finance survey. Also, in our survey, it was highlighted that MSMEs in particular are very impacted by this trade finance gap, despite the MSMEs' relatively low ratio of non-performing trade finance facilities. And I think Dr. Hani mentioned the information asymmetry and the lack of credit infrastructure has led to this in a big way. Therefore, we have realized that there is a clear need to develop innovative instruments, like, again, the ISDB through the ITFC, and of course, our partners from the African Bank and other development partners, that will help in develop innovative instruments to meet the needs of this underserved client group. This is why the bank, through the FAPA, which we call the Fund for Africa Private Sector Assistance, and I think Kanao mentioned it, supported a grant to African Bank aimed at promoting the development of factoring as an alternative trade finance instrument on the African continent. This has had the tremendous impacts on trade finance experts in commercial banks and the supports of trade and receivables across the continent. So far, this grant has impacted approximately 3,593 individuals, ranging from commercial banks, financial regulatory bodies, and factoring advocacy partners in South Africa, Congo, Uganda, Egypt, Senegal, and Nigeria. This is being effectively implemented by FCI, and we will have an opportunity to speak more to these successes at their annual meetings later this month. So with this, allow me, Deepesh, to stop here, and I will hand over to you. Thank you.
Thank you very much, Mr. Atut, and I call on your section around innovation, and I guess now onto one of my more favorite topics, the advancement of digital platforms, marketplaces, and trade finance. Mr. Mulry, perhaps you can set the scene. Can you talk about how some of the digital innovations, especially in the realm of receivables, are shaping the future of trade?
Yeah, I mean, it's been an incredible journey in my 25 years in factoring. I mean, going from an organization where everything was done manually to now nearly nothing is done manually. Everything is automated. Everything is, but we're seeing now what I call almost like the evolution 2.0. And this evolution 2.0 is comprised of many different things. And I'll talk about 3 or 4 of them. One is the one you just referenced, which is the development of these receivables exchanges. The very first receivable exchange was created in the United States back in around 2000. And the technology wasn't there to basically ensure that when you're financing against an invoice that you are doing so without the risk of fraud or without the risk of a large dilution event, and so it didn't succeed. But the elements of this kind of marketplace where you have buyers and sellers being the sell of their receivables into a marketplace, and buyers being banks, various hedge funds, any type of family office, any entity that basically has capital that wants to deploy it in what I consider a relatively high return business, you could do so, but you compete with other bidders. And so fast forward to, I think it was 2014 when the first receivables exchange was launched, called Treds in India. And this Treds has really been profound. It's over the course of the past almost 8 years, it's turned into a nearly $10 billion exchange, focusing only on domestic receivables, focusing and targeting only SMEs. And now, through this initiative that Prime Minister Modi has launched in Gift City, you have this now internationalization through the IFSC, which is their central bank, the central bank of Gift City, of this territory, inland territory. So they're launching this international exchange, and the difference between other exchanges and this exchange is that it is regulated. So it's very interesting, it's very new, and it's very exciting. The other is, and by the way, Kanaya, you'll appreciate this because you're well aware you have a joint venture or initiative with this company called Fiducia, which has taken this success of India and has implemented this and through a system that was, I think, they partnered with M1 Exchange, one of the 4 licensees, and now have launched this in Nigeria, and really, so this is the first true exchange in the continent. So it's very, very exciting, and I understand they're going to be at the annual meeting as well, presenting on Monday and talking about their evolution. So you have that. Then the other is e-invoicing. And e-invoicing is revolutionizing and will revolutionize the industry. And quite frankly, it's in the very, very beginning stages. But you can look to certain markets, and the market that the best market to kind of look at is Chile. So in 2013, they implemented the law on e-invoicing. It was mandatory. They started with large corporates, then they worked down their way to SMEs and then micro. And now 99% of their economy is all done digitally, all done on an e-invoice basis. Then someone had the clever idea 5-6 years later to modify the law and to basically state that purchasers of product, have 8 days to basically notify the seller or the owner of the receivable that they are raising a dispute. And this has basically caused the ability to, in a sense, create an electronic invoice that is almost a negotiable instrument, because now you have an outright obligation by the buyer 8 days later if they don't raise a dispute. So this has revolutionized the factoring industry in Chile. And this concept has now been exported to a number of countries in Latin America. And I see it now coming into Europe. I think it eventually will come into Africa and Asia and other places. So it is the most, I think, one of the more significant trends relating to digitalization. The third is fraud prevention through artificial intelligence. Now, fraud prevention from an electronic basis has been around for 20 years through technology, but it's what I consider analyzing what's happened, past tense, and not analyzing what could happen, future tense. And artificial intelligence gives this capability by understanding in a company, an individual, a CFO, a CEO, a controller, anybody that is basically has managerial oversight to kind of identify whether that person could commit fraud. And this is a game changer. And this future tense concept of using digital tools like artificial intelligence is a game changer, and it will be. And I think this is just, and it hasn't started. It really isn't there yet. So this is something that I also foresee coming. And then you also have the evolution of these receivables exchanges. You know, our friends in Monetigo and others that are launching these registries, the digital registries. And then the last thing I'll say is fintechs. You know, fintechs have had really, I think, an incredible impact on what I call the onboarding process. The ability to not touch or see the entity and providing financing in a very, very quick period of time. And also basically utilizing accounting software systems to upload invoices, and also using digital technology to basically digitalize contracts. So digitalized signatures. So, I mean, it's kind of endless. And of course, I know the UK just launched this new electronic digital means by which to do trade. This is something also I think will have a spillover effect globally. So, I mean, there are so many things going on. It's kind of endless. But what's exciting is that it's the beginning stages. We're just at the start of this new era, 2.0.
Thank you very much, Mr. Mulroy. Evolution 2.0, AI 1.0. Mrs. Awani, I know Afreximbank, as Peter alluded to, is really at the forefront of many of these innovations around receivables digitalization. Can you perhaps, at a very high level, talk us through some of these? And I'm very conscious of time.
I know. No, thank you. Let me talk about some of the new ones that we're working on, and I think I mentioned about the Afreximbank Trade Link earlier in my conversation. The conversation, which is a supply chain marketplace that we are piloting with within a bank in Nigeria as a pilot, and we think that that would actually stimulate growth in the receivable finance industry, especially in the context of reverse factoring. We're launching that in the last quarter of this year. It's been tested, and we're just going through and some of the business development, as it were, in Nigeria. We're also working with the FCI on another initiative, which is the payment repository. You know, finding the fact that, you know, our insurance market, our industry in Nigeria is underdeveloped, the credit underwriting industry is underdeveloped. And part of the challenges to that is a lack of credit information, payment information. So working with partners like FCI, we're trying to develop that payment repository that will have a number of uses. For instance, it will have things like credit alerts that will indicate when a factor is having issues with the data, data credit reports, portfolio analysis as well. It will also, in our view, form a basis for a digital collateral registry across Africa. So that's one of the initiatives we're working on. It's currently under study right now, and hopefully it will come into effect, you know, by 2024. Our traditional products that we have developed over time to support trade and finance is one of them is the MANSA, which is a KYC repository, due diligence repository, to improve investor and financiers' confidence in dealing with African entities. Right now, we have over 11,000 verified African entities on the repository. It will reduce the cost of compliance. Financiers and investors can have access to this information as they have dealings in Africa. The other one we have also introduced the Africa Trade Exchange, which is a marketplace we worked on in collaboration with UNECA and the AFCFTA Secretariat. It's an e-commerce platform to support trade. We recently repurposed it to support fertilizer and foods. And that's because of all the issues around the Ukraine crisis and the need to support Africa's food and security, so to speak. So that we repurpose it from being solely intra-African to support even extra-African trade in the context of fertilizer and grains and food. PAPS is very popular, the Pan-African Payment and Settlement System, which is a payment platform that will enable African countries to trade in their local currencies. It will deal with the high cost of foreign exchange. It will deal with the informality of trade. A Nigerian importer from Egypt, can pay in Nigerian naira, and the Egyptian company, receives Egyptian pounds. We also have a trader club, which is a member-driven club. That essentially is to deal with trade information in the context of, the fact that the lack of access to trade and market information we find is inhibiting investments on the continent. And many people, especially also, it also inhibits information for intra-African trade in the context of the AfCFTA. All these initiatives I just mentioned, fall under what we call the Africa Trade Gateway. The idea for Afreximbank is that a client can come into one of those platforms and be able to get information on in an ecosystem without having to leave the system. You can come in for customer due diligence and end up making a payment on PAPS. I think I will also leave it there in the interest of time. Thank you so much.
Thank you very much, Mrs. Awani. And I'm going to ask you all to round off this fantastic session with one very, very simple but very thought-provoking answer. So my question to you all is, what is the one call to action you want to say to the industry here at FCI Marrakesh to move the receivables finance industry forward to really support future resilient trade growth? Mr. Mulroy, I'm going to ask you first.
Okay, one word, community. And you see this on the call here. I mean, we would not have done 1/8 of the things that we could have done without the leadership of the Afreximbank, without the support of the African Development Bank grant, and with the support of Mr. Sumbol's organization relating to the development of Islamic factoring. I mean, it just would not have materialized or happened. And so my call to action is the creation of community everywhere, because this is what it's all about. And, I can tell you where we have strengths and I can tell you where we have weaknesses. I don't want to use the purpose of this video presentation now for that, but there are places where, we need support, more support in Asia, in the Americas, and in other places. And these people on this call are the examples of community. And this is what's so exciting. And that's where I'll stop. Thank you.
Thank you, Mr. Mulroy. Mr. Sumbul, over to you.
Thank you very much. Yes, my one word is collaboration. We should really continue, really to enhance collaborations and partnership. Today's world's challenges cannot be solved by one institution. It is very evident that the gaps and the needs are quite big. The complexity of the challenges and the crisis needs really to have this kind of a collaboration together to really face all of these challenges. So definitely I will go always for collaborations and partnership with institutions like the Afreximbank, like BADIA, like FCI, like IDB, like ISEC. That's why we are all here. Maybe we will not contribute to eliminate, but at least to reduce the overall pressure on our member countries and globally as well. Thank you.
Thank you, Mr. Sumbul. Mrs. Awani.
I tend to agree with Engineer Sumbul and Peter as well, that it's all about, I'll use the word partnerships,
Brilliant.
Community, collaboration, partnerships, and it's interesting to know that with everybody here today, we've had one form of collaboration or several collaboration. Engineer Sumbul talked about the Arab-Africa trade bridges, where we work together to deal with issues of the pandemic and even Ukraine crisis. With Peter Mulroy at FCI, that is with whom we've been working together to develop factoring on the continent. I'll have to say that with that collaboration alone, we have seen factoring companies emerge. FCI registered companies in Africa were in their less than 30 or so early 30s, but now we're seeing them over 40 and a lot of interest in factoring for one. And it is in that, and then with African Development Bank as well, where we also have the collaboration we also mentioned, among others, the FAPA collaboration. So in that spirit of partnership, being an African, with FCI holding Africa again, I think for the second, with the AGM holding Africa, I think for the second time, as far as I know, is to see as partners to work towards ensuring, work towards driving increased trade finance in Africa, which is critical for its economic development. Thank you very much.
Thank you very much. And Mr. Atut, last but not least, over to you.
I think I'll be in the same line. So through our partnership, we have to continue working on the creation of an enabling environments by working with policymakers, key market players for the interest of Africa and the people of Africa. And I think I will stop here. Thank you so much.
Thank you very much. Well, with that in mind, I would like to really thank our association partner, FCI, and for hosting such a wonderful 55th annual conference in Marrakesh. Thank you very much to all of you, wonderful, fantastic speakers, and for providing such a broad but also deep insight into some of the opportunities, challenges, and demonstrating partnership, community, and collaboration. Back over to you in Marrakesh. I'm Dipesh Patel, editor at Trade Finance Global.